Holy smokes everyone, yesterday the SP 500 jumped to 5.5% in one day, in its biggest rally in 2 years. The Dow Jones jumped 3.5% for its biggest one-day gain since stocks were emerging from the depths of the pandemic bear market, and the Nasdaq surged 7.3%, its best since March 2020. You might wonder, what is going on? Is the bear market over? Well everyone, let's not waste no more time and let's get straight to the latest news, facts and the data. Now look at this everyone, the Consumer Price Index, a key inflation barometer, jumped 7.7% in October versus a year ago. It rose 0.4% during the month, same as in September. But you may wonder, how is this good news, when in July and August it rose 0% and 0.1%. Well, we know that inflation is a measure of how quickly the prices consumers pay for a broad range of goods and services are rising. And another way to view inflation is to look at it over a 12-month period. So as you can see, here we have the inflation data for each month in 2022 over a 12-month period. Inflation peaked in June and it's been falling ever since. Well, you might wonder, since it has been falling, how does this represent good news for the markets to rally? Well, this increase is the smallest 12-month increase since January. Economists had expected price rose at an annual 7.9% clip instead of 7.7% and a 0.5 month-over-month instead of 0.4%. This basically means a basket of goods and services that cost $100 a year ago costs $107.7 today. Both were cooler than expected, and that was a sign inflation might be moderating. With today's CPI number coming down, it is giving some momentum to the idea that the worst is now behind us. Well, with what is going on, it seems that the market is now betting pretty clearly that the interest rate rises are coming close to an end. So you see those interest rate sensitive stocks doing really well, while CPI cooled more than expected in October and opening the door for possible easing in the US central bank's tightening plans, inflation remains well above Fed's target of 2%. And we believe it is quite early about any good news, and clearly the market is overreacting. A 0.5% hike rather than 0.75 in December is clearly on the cards, but until we have had a run of those types of CPI reports, a pause is still some way out. The inflation at 7.7% is quite high, and the consumer prices are still rising quickly by historical standards. It's just that the pace at which they are going high is decreasing. A decline in the annual inflation rate doesn't mean prices fell for goods and services. It just means prices aren't rising as quickly. If we look into individual aspects of the report, housing prices continued their climb, with the cost of shelter recording its largest month-on-month increase 0.8% since August 1990, while rising 6.9% from a year ago. Also, food and energy were the biggest inflation contributors in October. The interesting thing is that we have already seen this move in July 2022, when the core inflation rapidly dipped and a Fed pivot bear market rally followed. Guys, the Fed won't rely on a single inflation print to change their guidance, and that's why we prefer looking at a 3-month moving average in CPI prints to get a more smooth idea of where we are headed. We believe the Fed would need more evidence to change their mind, especially as Powell is keen not to let his guard down too early while battling against inflation. So you should not rush. We are not yet convincingly out of the woods. Anyway, we would be interested to hear what you think, so feel free to place your comments on the video, and also if you like our page and would like to stay informed and up to date in similar topics, please hit the like button and subscribe. A quick disclaimer. We are not registered financial advisors, these are just our opinions. The video content is intended to keep you informed and help you have a better view when investing, and please do your own due diligence before investing. Thank you guys for watching, and we'll see you on the next one.